So what it is, YouTube? It's your boy Don't Play Trent, checking in live from the lab, back at it again with another video as promised here on the little account, where I give you guys tips and tricks on how to grow a little account into a big deal. So as promised, like I said, I'm gonna be dropping gems and jewels all year long here on this little account channel, trying to get you guys ready for the little account strategy. So without further ado, we're going to go ahead and jump straight into this video. Today I'm going to be talking about Fibonacci retracement. Fibonacci. Yes, Fibonacci retracement. It's funny because I learned how to use Fibonacci like 5-6 years ago and like never really used it. Know how to use it, kind of didn't go into my strategy back then. So kind of just put it to the side. And ain't really give Fibonacci its credit. Like, this is how these guys is catching these prime time entries. Fibonacci. So once I started using Fibonacci again, game changer. I'm telling you, it's a game changer. So I'm gonna show you guys on the charts how to use Fibonacci retracement, when to use it, and then I'm gonna show you guys a couple examples. So before you even ask me what is Fibonacci, right? So I'm going to show you guys exactly what Fibonacci is. And Fibonacci, it says here, so if you just Google Fibonacci retracement, and it basically says, in finance, Fibonacci retracement is a method of technical analysis for determining support and resistance levels. It is named after the Fibonacci sequence of numbers whose ratios provide price levels to which markets tend to retrace a portion of a move before a trend continues in the original direction. So what that basically means is Fibonacci is a sequence of numbers where you're looking and waiting for a price to retrace to. So Fibonacci is mainly used in a trending market. And I'm going to show you guys here the levels that you guys need to pay attention to, because everything else is pretty much noise. So I'm going to show you guys the main levels that you need to focus on when trading and using Fibonacci retracement. So remember I said Fibonacci retracement is used in a trending market. So if a market is in an uptrend, you pull out the Fibonacci retracement because you need to figure out where price is going to retrace from, so you can get back in on the higher low to continue in the uptrend, right? So anytime the market is going up, you got to wait. You should wait for the market to pull back and then to keep going up. But when and how do you know when to get in or where the market is going to pull back to, right? So notice the Fibonacci that I have here, the retracement levels, right? So initially, if the market is in an uptrend and the market pulls back to the 38.2, it is considered a strong trend. Same thing, if the market pulls back to the 50%, it is considered a normal trend. Now, take into consideration that it says normal trend, right? So if the market is in an uptrend, it is normal for the market to pull back 50% and then the market continue to go up in its direction. So really, when using the Fibonacci retracements, you need to focus on basically 3 to 4 levels. Right here we have the 38, the 50, and the 61. So I'm going to show you on the charts. I'm going to actually show you my fib. And if you guys want to screenshot this, pause it, screenshot it, so you can get the exact levels. So here is the Fibonacci retracement that I use. And this is basically how I will use it. If the market is going up, right, making higher highs and higher lows, I'm looking for the market to retrace. Looking for the market to retrace, to come back to either the 23, 38, 50, 61, 78, 88. Now your prime time numbers is going to be this area here, which you'll hear other traders refer to this as the golden zone between the 50 and the 60. So remember, if the market pulls back to the 50% level, it is considered to be a normal trend. Basically, if the market is in an uptrend, the market was to pull back to this 50% level, this will be considered a normal trend for the market to continue to go up, right? All of these levels are important, but just for the sake of this video, I'm just going to show you the most important levels, or the most important levels where you should be looking to enter the market when you are trading in an uptrending or downtrending market. Same thing with a downtrend. The only thing you're going to do is flip it around, right? So in an uptrending market, we usually drag it from, I think it'd be better if I just show you guys on the chart. So let's just back up and let's just randomly find any place on the market, and let's find a good level like this level here. So this level here, let's pull out the fib. And how will we use this fib? So if I'm looking at this market and I am basically waiting for the market to retrace, after you get the push of the uptrend, our job is to wait for the market to retrace. Especially in an uptrend, our job is to wait for the market to retrace, because you want to get price cheaper in a sense. You want price to be as cheap as possible before entering the trade to continue in the direction. So we would, in this example, drag it from the low of the move all the way to the high of the move, from the low to the high. And as we can see in this example here, market comes right at the 50 and then retraces up. So if I was trading this particular trade setup, I would be waiting for price to hit the 38. I need to use it better. So I'm waiting for price to hit the 38, the 50, or the 61. These levels is going to be my most important levels. Now, you can use the Fibonacci on any time frame, and you guys already know what I like to say. The higher the time frame, the stronger the analysis. As you can see, this is coming off a weekly chart, a weekly time frame. So this Fibonacci is going to be more, it's going to be stronger than a Fibonacci that's on a 1 hour or a 30-minute, right? So like I said, in this example here, I just wanted to show you guys how to use the fibs. And for me, the fibs was just a complete game changer when it comes to me actually utilizing the tools, because knowledge is good, right? But applied knowledge is everything. And once I actually started to apply the fibs to my trading, I started to get prime time, pristine entries, because after prices went in its direction, you don't want to buy at the top, right? That's not trading. Trading, you're buying low and you're selling high. And that's the point of the Fibonacci retracement, so you can get back in when price is low. So after the price has already made a move, or already went, let's just say in an uptrend, price has already shot up, you don't want to buy at the top, right? You'll be buying too high. You want to wait for price to pull back down so you can get in and continue in the trend. Basically, you want to wait till price gets cheaper. And the only way, I'm not going to say the only way, but one of the ways to understand and find out where price is going to continue in this direction is by using the fibs. So like I said, fibs for me was a game changer. I pretty much knew how to use the fibs for ever since I started trading, but never really utilized it and added it to my strategy up until recently. And once I started using the fibs more, my entries started to get even more precise, where we have no more than like a 10 or 15 pip stop loss, because these entries are so pristine when I'm following my Fibonacci retracement. Let me find another example, because you can pretty much use the fib anywhere on any time frame, and it's going to give you some type of reaction when it comes to these levels. Here's another level here. So if I could just go through the chart and randomly pull out fibs. And the way to use fibs is you're going to always drag it from the low of the move. You always want to include the wicks to the high of the move. And in this instance, it'd be here before the market retraced. And as we can see in this example, the market retraced to the 61, which would be considered a weak trend in a sense. I almost said normal. Normal would be the 50%. Once the market retraces all the way to the 61, it's considered that the trend may be getting weaker. So in this instance, obviously, market continued to push up. But if I was trading this, let's back up. If I was trading this, I would already be aware that this is my fib of my daily chart. I am looking for an entry somewhere. We've already broke and closed over the 50, so my next level will be the 61. I am looking for an entry or for buyers to take control right here near this level, the 61. I'm going to then jump on my lower time frames. Wait for price to get to this same level or in this same zone. Watch price action. As we can see, we're starting to already get some rejection right here at the green line. If I scroll out, you see that the green line is my 61. We got a nice wick. So once price gets to this level, our job is to now watch price action. Watch the candles. Watch how price reacts near this level. Price then finds some type of support. Looks like price came down just a little bit more. But initially, this is the area that I'm looking for. It may not be on the money perfect, right? Sometimes it is, sometimes it's not. The market is going to do whatever it wants to do. But this is the area that I'm looking for any type of buys, or I'm looking for the buyers to take control. Because on my daily chart, this is also lines up with my 61. And as you can see here, this previous candle here looks like a hammer, which is a signal for reversal right here in this area, and then market continued to shoot up. So that is pretty much it. That's all. This is how I use Fibonacci retracement. Like I said, Fibonacci is one of the great tools to use when trading. Definitely add that to your arsenal of tools that you're already using, if you're not already using. If you guys like this video, please don't forget to hit that like button. Don't forget to subscribe, because I'm going to be dropping gems like this all year long here on the little account. Like I said, we're going to be dropping videos leading up to the actual little account strategy. But definitely the fibs, utilizing the fibs is definitely in my arsenal of tools. So if you guys have any questions, comments, or concerns, please leave it in the comment section below. If you guys have any topics that you want me to go over, also leave it in the comment section below. I will definitely get to it, read it, definitely get you guys the videos that you guys want to watch or that you want to see. So anything you guys need help with, please do not forget to leave it in the comment section, and also subscribe. So video not meant to be too long. It's your boy, Don't Play Trent. I am checking out, and I will see you guys on the next video. Gang.